Hello everyone, welcome to Residency. My name is Andrea Papito. I'm founder of Residency, a company that helps entrepreneurs, business structures, also individuals, to have a defense file, a defense compliance documentation to be bulletproofed against any kind of tax audit from foreign jurisdiction, from foreign tax authorities. When you have, of course, international structures. So here in this video, I just want to talk about the new tax regime that has been introduced in Turkey. So the Turkish government introduced a very generous tax regime for those who wants to relocate there. So if somebody didn't live in Turkey for the last 3 years, latest tax 3 years, they will get an exemption from taxes on their foreign source of incomes. Okay, so we have 20 years of basically territorial taxation. Okay, so basically Turkey says, the Turkish government says, if you move here and you've not been Turkish tax resident in the last 3 tax years, we're gonna give you 20 years of territorial taxation residency. So we switch from worldwide income principle to territorial taxation principle, okay? Which is quite generous. So what does it mean exactly, territorial taxation principle? It means that every source of income coming from abroad actually means generated from another jurisdiction, and those are dividends, capital gains, interests, for example, or rent. Okay, also salaries, but here we have to be careful. Salaries. Okay, I will put an asterisk here, and some other miscellaneous foreign source of income. So basically the principle is the following: if your income has been generated from abroad, from a foreign jurisdiction, is not taxed in Turkey. Okay, this is how it works. So dividends, capital gains, interest, rents from real estate and everything. But salaries means that you're working for a foreign company in the foreign territory. You should basically take the Turkish tax residency, then you have to keep working abroad or for a certain number of months abroad, okay? And then you can qualify those salaries as foreign, okay? And then are not taxed in Turkish. Now, when Turkey basically exempt from taxes all your foreign income, it means that you don't even have to report on the local tax file return, not even disclose any asset, nothing. Just it will ignore completely this kind of situation. Keep in mind that the country from which you are receiving those stream of incomes might still apply taxes for non-resident. So the dividend that comes from a certain country, if the treaty between Turkey and the country from which you have generated your dividends is favorable, then you might have a reduced or even zero withholding tax at source when you receive dividends. Okay, and the same principle for the rest of the incomes. So okay, it's true that Turkey gives you this big benefit, but make sure that the country from which you're receiving all the stream of incomes basically have a nice treaty with Turkey. Otherwise, you're gonna lose a benefit, because if you're coming from a country that doesn't have a treaty in place with Turkey on dividends, for example, well, you might still be subject to full dividend tax in your former country of residence. Okay, so be careful about this point. So it's to be analyzed if all your stream of incomes actually are not subject to not reduced withholding tax. Then the other big problem of this one, so it's a nice regime, actually it's a very nice one, but has to be, as always, checked on case-by-case scenario, on case-by-case personal analysis. And in the description below the video, you will find our calendar link to book a consultation, so we can help you to understand if this situation makes sense for you or not. The other problem is that when you have a company abroad, LLC, LTD, whatever, GmbH, SRL, from any other country in the world, and you are the only administrator, or the majority, you own the majority of the shares, you have the majority of the rights of voting, you have you are also the administrator, well, then it's a problem, because everything done with this company actually is a Turkish stream of income. It's not a foreign stream of income, even if this company has been legally set up abroad or used to be set up abroad. Because the problem is that if you manage this from Turkey, everything will be Turkish, okay? Everything. Like corporate tax, dividends, and even your salary as administrator of one of these companies. So you cannot escape, you cannot apply this on the territorial taxation income as long as your place of effective management, because Turkey applied the famous place of effective management principle when you run a business, when you run a company. So if you are the place of effective management of this foreign company, the company is not foreign, it's a Turkish company. It will be requalified. You risk to see your company requalified by the local Turkish tax authorities, okay? So this is a very important point that people might underestimate. So you have to make sure that you're not really the administrator, you have an administrator that runs your administrative tasks in the country, in respective countries of where this company are incorporated, or you don't have the majority of the shares, or every time that you need to manage this company, you have to fly outside Turkey, okay, to make sure that this company won't be requalified as a Turkish one, okay, and lose the benefit of the territorial taxation special tax regime. Now, how we can help you? We can help you first to understand if you are compliant with this tax regime. Second, if you have a foreign company and you want to run it from Turkey, you have to understand if you're compliant on the place of effective management outside the Turkish border. So we can check through your documentation, through your paperwork, the way how did you manage in the past this company? How do you think? What is your ideas of managing this company from Turkey? And you want to apply for this big tax regime, because of course if you manage to keep your place of effective management outside the Turkish border with some behavior, with some organizations that we can help here in Residency, basically you can benefit from this tax regime, because then all the dividends coming from this company of course are foreign source of income. Okay, I hope I was clear in this video, and if you have any doubts, you can always write us at info@residencia.tax, or you can book a consultation at the calendar link below this video. And see you to the next content.